morning. You're watching Business World Live. I'm Danie, Laurel.
And I'm Jess Delos Santos. It's the start of a new trading day, but first, let's go straight to our top story. S&P Global Ratings says the projected economic recovery next year will be crucial for banks, warning that a deeper than expected recession will increase downside risks for the sector. Analyst Nikita Anand said the 2020 recession will likely impair the debt servicing ability of consumers, small businesses, as well as big companies. She said the extent of the impact on banks will depend on recovery and stabilization of credit conditions in 2021. Anand said local lenders can absorb credit losses, saying their good capital position and more than 100% provisioning of non-performing loans could provide a cushion against challenging conditions. But a longer recession, she says, could result in substantially higher credit losses for banks. S&P expects MSMEs to contribute to higher bad loans in the coming quarters, while big companies are seen to weather the storm. S&P forecasts that the economy will contract by 9.5% this year before growing 9.6% in 2021. Okay, Dan, another vaccine candidate lifting sentiment yesterday, but we still didn't break above 7,000. Is that positivity spilling over into Wednesday hump day?
Okay, so before I answer that question, just let's take a quick peek at how markets performed all over the globe overnight. You can see in Wall Street, for example, a bit of a pullback there. The S&P 500 down by 0.5%. Over in Europe, it's a very mixed picture here. But this, of course, comes after U.S. stocks saw a record high on Monday. And this, comes amid Moderna, finally another one coming into the foray here in terms of vaccine development. Moderna reported that a preliminary phase 3 trial data showed that its COVID-19 vaccine is 94.5% effective. And this, of course, is the second U.S. drug maker to report their results that, according to Reuters, actually far exceeded expectations. So this comes after Pfizer, which is also more than 90% effective. And they are saying that pending more safety data, of course, and regulatory review, the U.S. could actually have these two vaccines, at least for emergency use, by December. You might see as much as 60 million vaccines available this year. But this, of course, also comes amid Jerome Powell of the U.S. Fed's comments saying that the U.S. economy still has a long way to go before it fully develops from the pandemic. And as I mentioned, over in Europe, you've actually got Chancellor of Germany, Angela Merkel, warning that the situation over there remains very, very serious. And you can see in Asia Pacific that the start is very muted. So it's rather mixed, really. You've got the indices over in Japan down, the Nikkei 225 down by 0.9%, although in Taiwan, it's actually enjoying some gains here. In South Korea as well, the Kospi and Kosdaq also staging some gains. So again, everybody weighing in on whether that vaccine candidate is good enough to propel the markets. But over in our local boards, we are seeing that positivity spilling over into hump day, as you asked earlier on. We're still not breaking the 7,000 level there, Jess, but we are opening up by 0.2%. And this actually bounced back after we saw 3 days of losing, a losing streak of 3 days, but we were still up by 0.6% yesterday, along with the rest of Asia, Jess. Now, just quick peek at which sectors are performing the best here this Wednesday. A bit of a strong showing, save for properties, which are down by 0.3%. You've got financials leading the charge, that's up by 0.9%, Jess.
But let's try to go more specific here. How are our lenders performing here, Dan, especially after that note of caution from the S&P?
Exactly. Well, banks have been very cautious in the sense that they have, set aside quite some provisions already. Most of the banks, especially in the first 2 quarters of the year, the third quarter seems to have set less provisions in the first couple of quarters. But as I mentioned here, you can see BPI leading the pack here. That's up by 1.8%. Still a couple sitting out this rally. UBP, the worst performer this morning. But you've also got PNB. That's the second best. It's up by 0.9%. And this comes after they've also, or amid rather, what they were saying is that the extra loans after their property sale might go to as much as 80 billion pesos. So recall that they have already announced that they will be looking at around 1 billion worth of property. So that's roughly, a little less than 50 billion pesos. But now it's actually looking to book incremental loans worth 80 billion pesos. So this is a filing in their local board. So they have planned, of course, to sell to improve the capital position and also for the liquidity losses here. I want to also do a quick peek at the property space since we're at the topic, especially since there's quite some momentum even amid the fact that it's opening in the red. There's actually a lot of news in terms of those wanting to tap into REITs, and you've got the latest members here. One, of course, is Double Dragon, that had said that it will be pushing back its REIT issue possibly on 2021 na, but it actually said that on Monday it will be doing the regulatory approval this week already. So that's for a planned 14.7 billion peso REIT. And another one, so I just want to take a look at Double Dragon, that's up by 0.14%. But take a look at Vista Land, that's going down by 0.5% after having seen quite a rally. I'm going to pull that chart up for you guys so you can see how it performed in the past 3 days. It actually rose the most in 5 months. And this was on the prospects of a possible REIT sale. They said that they are seriously looking at the possibility of doing a REIT. Recall that it has 1.5 million square meters of a leasing portfolio, mainly malls. And this, according to Lexter Azurin of AB Capital, the take-up should be good. After we saw investors pretty hungry for that A REIT, you can see Vista Land was up by 5.8% in the past 3 days of trade. And finally, I just want to take a quick peek at Dieto Telecom because that should be retrading this morning. Let's just take a very good look at that. It had been on a trading halt since for several days now, and it's up by, get this, 7.8%, 7.8%, 6 pesos and 80 centavos. This, of course, as Dennis Oy had restructured his holdings, okay, and so now this Dito CME, which is trading right now owns 53% of Dieto Telecom after it did that share swap, okay? So previously, Udena owned the majority of that, but now it's actually going to be Udena owning 80% of this listed company, okay? And the public float of Dito CME will now be reduced to 20%. Now, another Dennis Oy company, Chelsea Logistics, will now have an indirect 6.6% of stake in Dito Telecommunity. So very interesting play here with Dennis Oy rotating, let's say, the ownership of the telco. It's now mainly in the Dito CME, which is publicly traded, Jess. Now, we'll have more on markets, especially the property space later on. But just to take a step back and look at the digital economy, you've actually got one study here showing how bright the future might be for them. What are we talking about here?
Okay, I'm telling you, Dan, they are projecting a value of as much as $28 billion come 2025. If that doesn't excite you, I don't know what will. They are saying they are expecting the digital economy to actually accelerate at a compounded annual growth rate of as much 30% annually. That's according from the latest study here from Bain & Company, Google, and Temasek. They did a study on the e-commerce in Southeast Asia. And for this year, for the local digital economy here in the Philippines, they are expecting gross merchandise value, or GMV, to actually be at $7.5 billion. That is at a growth rate of as much as 6%. In fact, they are saying in that study as well, of the new digital consumers, 37% are actually saying that they are going to continue to use internet services even after the pandemic, while 95% of them said that they will continue to use at least one digital service even after the crisis. Also, what's interesting here is in terms of internet usage, I think this is something you might be able to relate to, that they're saying that has actually increased as much as 5.2 hours during the strictest lockdown. The number that's, of course, refers to the number of hours online per day. That is up from just 4 hours previously. However, when lockdowns were eased, you have online hours actually declining a bit, but still at 4.9 hours a day. Now, users, according to the study, went online to search for solutions to new challenges. Also, what's interesting here is that they are projecting e-commerce to actually grow by as much as 55% this year to $4 billion. That is up. That's up by 55% and up 31% to $15 billion in 2025. At the same time, online media, they're expecting that to actually go up by as much as 27% to $2.1 billion this year. And at the same time, expecting it to accelerate even further to $5 billion come 2025. Also, the study notes that the value of investments in the internet sector has actually grown by a mile, 34.13% to $169 million in the first half of 2020 alone. That covers 22 investment deals. But what's interesting here, you have fewer investment deals this year compared to last year, which was at 32 investment deals. But at the same time, there's higher value in the deals this year. And according to the study, investors are doing away with fewer deals at more attractive valuations for higher returns in the long run. That, according to them, is really reflective of how investors are going for sustainable and profitable growth at this stage. However, they also did note six major barriers here. Ironically, you have the likes of internet access, funding, consumer trust, payments, logistics, and talent as the major hindrances they have noted here in the Philippines. However, they also did say that significant progress has already been made when it comes to payments and consumer trust.
Okay, Jess, now, as you mentioned, very exciting figure here. How can I, as an investor, better take advantage of that and get a part of that pie?
Well, it's all about recalibrating, they say, in order for you to actually tap into that booming digital economy, not just in the Philippines, but in the region. In fact, you have Alessandro Canarsi, is one of the co-authors of the report. He did say, it's time to recalibrate towards sustainable and profitable growth, refocus on firms that advance towards profitable organic growth rather than metrics driven by subsidization. At the same time, he is saying, try to differentiate between essential versus non-essential tech. And that might actually mean that startups should focus on improvements in efficiency and access to essential goods and services. So lots of things happening when it comes to digital economy here in the region. Again, let's drive it back to that point, $28 billion come 2025 for the local digital economy.
But Jess, are our internet speeds and connectivity problems
Well,
going
that's one
to
major
be
hurdle.
by then? All right. So thanks for that report. We will be taking a quick break, but we'll give more of the news when Business World Live returns. Stay with us.
You're still watching Business World Live. I'm Jess De Los Santos. A measure calling for a third package of the government's economic stimulus program, or Bayanihan 3, has been filed at the House of Representatives. Marikina Representative Stella Kimbo filed the proposed Bayanihan to Arise as one act, which takes into account the extensive damage caused by a series of typhoons on top of the pandemic-driven economic losses. Kimbo, who chairs the House Stimulus Committee, says hardest hit areas need additional 400 billion peso economic stimulus for rehabilitation and mitigation of future disaster risks. Additionally, Kimbo said Bayanihan 3 would ensure adequate funding for vaccine procurement and a steady stream of cash aid for low-income families. So far, the Budget Department has disbursed 1.5 billion pesos to LGUs to augment their calamity funds following the onslaught of Raleigh and Quinta. Budget Secretary Wendell Abisado said additional funding for those affected by Typhoon Ulysses would soon follow. Now, sales of imported cars saw a 16% October, but the industry is optimistic this could still be a good start. Data from the Association of Vehicle Importers and Distributors said there were over 6,000 vehicle units sold in October. Year to date, sales also plummeted 43% to some 40,000 vehicles sold in October compared to the 71,000 units sold last year in the same period. But there is indication of month-on-month recovery according to the group. This as businesses start to reopen and travel and tourism slowly welcome back customers. Both passenger and commercial car sales fell last month. The group said the industry has started to overhaul its sales strategies during the pandemic, with more distributors allowing online purchases and contactless pickups and drop-offs for after-sales needs.
The Asian Development Bank said a $20 million technical assistance fund is available for its member countries to aid in vaccine distribution. The ADB fund is seen to assist countries in their health system assessments, country readiness plans, and vaccine delivery tracking systems once immunization efforts begin. The Finance Department earlier said it would be tapping the ADB and the World Bank for technical and financial support in its vaccination goal for 20 million Filipinos next year. More recently, President Rodrigo Duterte bared government plans of borrowing $300 million to finance the country's vaccination program. Calls for an extension in the validity of the Bayanihan 2 until next year have been raised as the country seeks enough funds for vaccine procurement. Signal TV and Meralco subsidiary Radius Telecoms are forming a new pay TV home and TV internet service called Red Broadband. Radius and Signal said Red Broadband will offer unlimited fiber internet and pay TV with a starting monthly price of 1,299 pesos. The recovery from the pandemic has been uneven, but we do have some segments already back on their feet. Here to chat with us about their third quarter print, we have with us the CFO of Cebu Landmasters, Mr. Grant Cheng. Good morning, Grant, and welcome to the broadcast.
Good morning, guys. Thanks for having me.
Hi, sir. So let's kick off with those numbers you have. Net income for the first 9 months of the year down 9% year on year to 1.5 billion pesos, but you're going to be seeing quarter on quarter up by 57%. You've also revised your targets here to plus or minus 10% for the entire year. How does this compare to projections pre-COVID, to what you were expecting before the third quarter, and are you generally satisfied? I know it's been a tough year.
It has been a tough year, Danie and Jess, but I think that we have fared better than most. In fact, we're seen to be outliers in the industry, and I think that is thanks in large part to our business model and the market that we serve, where there's still just so much unmet demand. So the market fundamentals have not changed. People still need proper, well-developed housing in the Vismin region, where we have number one market share. So I do believe we're still in the right place at the right time, despite the challenges. And so, how does this compare pre-COVID? Obviously, it was revised downwards. We at the beginning of towards the end of 2019, at the beginning of 2020. We were aiming to grow 20% year on year, which is what we traditionally delivered since we went public back in 2017. We were on track to reach 20% compounded annual growth rate, both the top line and bottom line. So what the COVID pandemic did was it put our growth trajectory a little bit on pause, and we feel that we can resume that growth trajectory in 2021. So this year, while there is a bit of a slowdown as compared to the targets, we are definitely going to end up in black. We're going to be still a profitable company. We feel that a more modest price is to simply replicate the results that we performed in 2019 within a 10% bandwidth, plus or minus, accounting for, of course, delays or stoppage in construction because of the quarantine regulations, the challenges of working with our external partners, such as our regulators and our banks, in terms of approving our projects and letting them go through, and of course, our buyers who may not be able to see and go and buy as many houses as they would like. But then I do think that this is still a relatively positive development. And our third quarter performance, I'm pretty satisfied with it because it is hewing very closely to where we thought we would be when we revised our projections back in April or May, when we were already seeing that this pandemic was not going to be over within one season. We knew that it was going to be a bit of a struggle and a long haul all over the world, and so we knew that we had to adjust our numbers and adjust to market reality. And I think we were able to do that, and our numbers are hitting close to where we projected them to be when we made that revised projection.
Sir, let's talk about the construction space, which you already mentioned. To what extent was construction halted? Do you feel that that's just, a stroke of, I wouldn't say luck, but a stroke of luck that, most of the cases, for example, were concentrated in the capital region and Vismin was less affected? You had less stricter lockdown, so to speak. Or is that also a testament to the fact that you were able to actually deliver construction activities safely despite all of these lockdowns?
Um, well, you're right. It's not really luck, but I think this is the nature of the market that we serve, which is one we're in an archipelago, and so even we sometimes get surprised at the results coming in, which means that while most people and investors were probably based, if they're based in Manila or the big cities, you felt that the quarantine was overly restrictive. Was useful to keep in mind that this was not uniform throughout the whole country, and that even while Metro Manila was in the most severe phase of the lockdown, other parts of the country who have seen and had the foresight, they saw, okay, the local government saw what was happening in the capital region. They imposed their own strict lockdowns, or at least they tightened up their borders such that the local economy was still able to thrive and still able to normalize. And so they were able, there were different phases or different degrees of quarantine. So just to put a very specific example, um, in the month of April, we actually sold out one condominium project tower in Cagayan de Oro. If you recall, April was one of the strictest quarantine months in Metro Manila, and even Cebu for that matter. But then in another market where we are operating very strongly, we were able to continue our sales and construction activities, which, by the way, is in cooperation and is in full compliance with what the local regulators asked us to do. And that speaks to the second part of my answer, which is that this is actually a unique advantage of Cebu Landmasters. It is what I call one of our enduring business modes, and that is our familiarity and our mastery of the markets where we operate here in Vismin. Just that cultural affinity, it's that familiarity and that knowledge about how the local government units in every city that operates, how they work, what their priorities are, how they would like to do things. And our rapport and our history with them has allowed us to be constructive partners with them so that we can strike the right balance between keeping our economy humming and strong in these different local government units, but at the same time prioritizing and making sure that health and sanitation protocols are followed. So in our construction sites, we follow social distancing. People have much stricter sanitation protocols. So the result is that while we were not necessarily able to go full speed on our construction as we would have before COVID, we also did not completely stop. So we were able to find a nice balance, a nice compromise with the local government units, where even if it's 50 or 60% capacity, we were still able to deliver our projects to some degree.
Okay, Grant, building up on that point there, how does that feed into your sales performance? What's interesting here is, at least in the third quarter, sales were actually up by 14% year on year. Was this demand already there from the get-go, or was it there also a shift in behavior here from your consumers here? Was there a shift from consumption, or maybe from other competitors as well?
There was definitely a shift, Jess, in consumption, and you could see that in the market segmentation of where the demand was coming from during this time. And I can share that the business segment that thrived the most during the quarantine period was the affordable housing segment. And so that tells me that that housing segment, if you see all the government numbers on housing backlogs and the number of Filipino families and households that have yet to have their own homes, right? And there's this many millions of backlogs for Filipino families. That's actually the market segment where demand has risen. And in fact, um, the COVID situation has only actually sharpened their demand. It has only highlighted the need for them to buy quality, well-designed, and well-developed homes. And as one of my buyers said to me, and this really, it reminds us of our mission and what CLI sets out to do in, our place in society. He said, Sir Grant, my house is my number one PPE. Now that I'm working from home, now that everyone, my offices, my workplace is asking us to stay home more and more often, it's the perfect time to have my own individual home rather than stay, let's say, in perhaps a multi-family crowded compound still. So this type of demand exists very strongly still in the Vismin region. And a lot of people who were on the fence, maybe before COVID, they thought, maybe I could wait it out for a couple of years. They've just become more resolute in buying their own homes, and that's the market we're serving, and that's the fundamental market demand that we are addressing right now.
Grant, what about pre-selling? Are you in any way, helping finance these homes to a certain extent? And to what extent were you affected in terms of, there've been loan moratoriums? You've been extending the payment terms. Did you feel this? And has the monetary easing of the central bank already been felt in terms of more people are able to more easily get loans, or is this still not yet in the system yet? Sir, are you hearing us right now?
Oh, hello.
Hello,
Yes,
Grant.
sir.
Yeah, I'm sorry, you were cutting out a little bit. You were asking me about how the
Sir, yes,
financing situation was working out.
exactly. And yes, and whether the easing of the central bank and lowering the interest rates, are you feeling this positive effect already in that consumers can now more easily tap into loans, or is this still not feeding into the system yet?
Well, we can feel it. I can feel it on two sides. Number one, we continue to have very strong support on our commercial loan side. So we have dozens of financial institutions, commercial banks, who are still very bullish on Cebu Landmasters. They've continued to give us very prime borrowing rates. Um, I have uh, I have adequate, in fact, more than adequate. I have excess liquidity and funding sources that I will need. And so I always tell my team, we are in a very fortunate situation because we already have lined up all the funds that we will need to finish all our projects. So this is this is also a message to all our buyers. If you buy a CLI unit, you can be assured that we have the funds and we have the liquidity to finish and follow through with your project. So on the other side, for our buyers, have they been being given bank loans? Actually, yes. There are some banks who have struggled a little bit, and we feel that are now more conservative in terms of approving credit lines for end user buyers. But that's not universal at all. In fact, if anything, there are more banks who are approaching CLI right now and saying that we would like to expand our business partnership with you and pre-qualify some of your residential developments if you can channel and if you can allocate some business to us and make sure to refer some of your buyers and get home loans with us. Because the fact and the other one is pag-ibig or HDMF, pag-ibig as it's known more widely. Um, the challenge is not actually availability of credit or liquidity from where we sit in our position. The challenge is operational, because a lot of the banks, the credit officers, the appraisers, and the approving authorities are working from home or somehow on a skeletal work arrangement. Then it takes a little bit longer to process. But to me, you know that is a situation that we can definitely withstand and tolerate. In fact, I completely understand, and we absolutely respect the need to comply with local health standards. And if it takes a little bit longer, that's fine. But what's important is that we know the banks and the financing availabilities and the financing options will be there for our buyers when they need it.
All right. Grant, I also would like to know how dependent are you on the overseas Filipino market here? We did see remittance actually bouncing back in September to over 9%. How do you expect that to actually buoy as well your performance for the rest of the year?
Well, I can tell you, Jess, that our OFW buyers profile was 40% pre-COVID. It went down to less than about 20% post during the COVID situation. So I want to reconcile that because our sales numbers still went up. So that means that this OFW demand was actually replaced by local buyers who are just waiting in line and wanting their own homes. So that tells us that there was much, much more demand. There are several layers of demand that we could actually address in this market, even as OFW buyers may have been pulling back a little bit. But I will say this also very quickly. A lot of our existing OFW buyers, they call us up and in the first breath, the first thing they say is they want to maintain their housing contract. They want to see it through. That is the very reason they went abroad, is to provide a home. That's their number one ambition. They want to provide a home, a place to stay for themselves, for their children, for their parents, for their siblings. So our target market are primary users. These are people who will use the homes for themselves. So to that extent, because they're not investors, speculators, or flippers, right? In the first breath, they always say, our priority is to maintain our contract. We want to see this contract with you. They need some assistance. Can you give us some payment deferrals? Can you stretch our payments? We don't want to cancel. Can you put it off by a couple of months? And though we're not required by law to do so, we voluntarily do it. We extend help. We try to help as much as we can and allow them, give them the space to recover. And we think this is going to, this is going to help them out a lot. And I saw the remittance numbers this month. It's one of the numbers that I follow very religiously every month out of the BSP. I saw it surprisingly went up already. So, that tells you all the sacrifices that our OFW countrymen, our kababayans abroad, sacrifice their time away from family, their blood, sweat, and tears. They will send money home as soon as they can. And when they send money home, I can tell you that yung hulugan nila sa bahay, their obligations in order to meet to be able to meet and address their housing contract obligations with us. That's going to be one of the first priorities. They told us they'll sacrifice all other luxury payments. They'll even stop paying other installment payments, but never their house. That's the last thing they'll sacrifice.
Kailangan talaga basic needs. Thank you so much for those
Kailangan
insights.
talaga.
Back to basics talaga. That was CFO of Cebu Landmasters, Mr. Grant Cheng.
Thanks, guys. Thanks for having me.
And that's the first look into the business day. Today is Wednesday, November 18. I'm Danie Laurel.
Catch us again tomorrow at 9:30 a.m. I'm Jess Delos Santos. We are One News.
Hi, Mase. Morning.